But that's a little bit of a misleading statistic, because what happens a lot of times is some agents will update the list price of the home to the contract price right before closing.
Hey guys, today I've got a guest on, Rob Thompson with the agency. And so super cool. This is like the stats king. I've referenced him several times on my channel. Anytime I have some stats that I get from him, because he'll just whip them up for me. Because you go super deep, right, into the stats.
I do. I actually went back to school to learn to program about 5 years ago. So,
Did you?
And then I went back again a couple years ago so that I could drill down into the statistics.
Wow. Yeah, because your numbers go deeper than what like most real estate agents get, right?
Yes.
Okay.
Yes, they do. And my analysis goes much deeper than most, I think, care to do.
Okay. So I actually go through PPAR to get my stats. And so can you kind of share like how you dive into that?
Sure. So PPR data is good. I mean, obviously they're the
Yes.
originating source of data. One difference maybe between the statistical types of analysis is when they publish their results, they'll, at the first week of the month or so, they won't go back and retroactively update them. What's out there is out there, right? But as we know, agents sometimes take 2 or 3 weeks or so,
Or they
sometimes
put the
longer.
wrong price.
Put the wrong price. Or they'll take some time to update them. So most of the analytics that I'll pull using the most current data at the time of the pull, and then my dashboards and things that I write, they pull, for example, the one I'm looking at here that you can't quite see, but pulls the last 3 years of data to parse the information, and so it goes back 3 years. So I'm always looking at the most comprehensive, up-to-date information. As opposed to maybe some of the static links that you see out there.
Yeah, because oftentimes I'll look at my stats and I'm like, oh, these are a little bit different than what Rob has, but yours are way more accurate. So
Yeah, for example, I just pulled right before we started here, I pulled this round of stats. What we're looking at here is the most up-to-date stats for this month, for the last 30 days, for the last 3 years.
Okay. So do you want to kind of go into like what's important for buyers and sellers, I guess, to know about the housing market right now? And in what you are predicting is going to be happening with the real estate market in the future?
Good question. I'll just give you the rundown like I would normally do. Okay, so here we go. Our average price right now is $554,000 with 24.7 days on the market, 24.8. Our median price is $487 with 14 days on the market. Our closed to a list price ratio is 99%, 99.1. But that's a little bit of a misleading statistic, because what happens a lot of times is some agents will update the list price of the home to the contract price right before closing, somewhat, and then also doesn't factor into account price drops. One important measure, I think, for buyers and sellers is the close to original list price ratio.
Okay.
So we want to be measuring against that. And so, for example, our close to list price ratio for the month of August right now is 99.1, but our close to original list price ratio is 97.09, which means that homes are falling 2% before they're going under contract.
Okay, gotcha.
Okay, so that's an important metric. Another metric to weigh that against is the close to original list price ratio for homes that are under contract. So we can't know what those homes are going to close at till they close, right? But we can measure the subset of homes that are under contract and measure what their list price was at the time they went under contract. And I can tell you right now, it's 97.66%. So we're seeing, it's maybe hard to envision without the data in front of you, but if you take the difference between the close to original list price ratio and the close to under contract ratio, you can see market trend. And so what I'm looking at here indicates that there's about a 0.5% upswing in the market in the next couple weeks.
Upswing.
Upswing,
Okay,
yep.
interesting. Because a lot of people are saying that, like when the comments on my YouTube channel, it's like, no, it's going to crash. It's just like 2008.
So not quite. If you look at the injection of money, since 2008, we've injected trillions of dollars, literally $5 to $6 trillion or more into the economy to soften that blow, to prevent that. And so a lot of these companies, big companies, are sitting on hundreds of millions of dollars that they can use to absorb any losses and shifts. So they can, if you have $100 million in the bank and you own 100 homes or 200 homes or 300 homes, you can ride out market downturns for longer.
Yeah.
So it isn't like 2008 in that, or 2006 in that the types of loans, people could afford them more so now.
Right.
There's a lot more liquidity in the market still. So I don't think it's going to be 2006 absent a Black Swan event. coined by Nassim Taleb, basically means something happens that has an outsized impact on the market. With our globalized economy, our economies are actually much more fragile than they might appear to be. Something like the Suez Canal incident, where that tanker went sideways and blocked global trade for a week. That cost, I want to say, don't quote me exactly, but it cost almost $1 billion in global
Wow.
trade. I can look that price up exactly, but that would be a black swan event. So unless we have a black swan event, what I've been saying, that all things remaining equal, what we're feeling is probably what we're going to feel for the next 6 months to a year. But housing is a very hard thing to predict as well.
Yeah.
The thing we have going on here is we just have 2.35 months worth of inventory. So even though the interest rates are high, prices are not falling because there's not enough homes. So those who can buy are buying, which is keeping the price high and also we have so few homes. A balanced market is said to have 5 to 6 months worth of homes.
Yeah.
Ours has 2.35 months worth of homes.
Yeah.
And we are actually just right now down 4.77% from our peak of last May.
Wow.
So we've had a bit of a ride.
Yeah.
We saw, I have a graph that shows the rolling average, and it shows that we did at one point drop down to 462 as our average price in the last since May of last year, but we're back up to 500K, up above 500K, so just a couple percent off our peak.
Yeah. Yeah. And so a lot of the people are saying, sales are down across the nation, which is most likely due to the fact that homes available for sale is down, right? Obviously, if you have more of a supply of something, you can sell more of it. So that is a huge argument, which is true, but it's not because we're crashing. It's more because there's just not enough inventory or homes available for sale for the demand.
Yes. Yeah. So home prices aren't crashing here locally, specifically because there's not enough homes for sale. Even though the interest rates are high and affordability is a major issue, there's enough people who can afford to buy. For example, month to date, our home sales are down 45% from August last year of this time, from the 1st to the 7th of August.
That's a lot.
It's huge. If we go back the last 30 days, home sales are down for the last 30-day period in the same 30-day period last year, which is important to stress because it is apples to apples.
Right.
26%. So we've seen a 26% loss of number of sales relative to last year, which is a lot. Last year at this time we had 1,496 homes sold in the last 30 days. Right now we're at 1,111. So it's a complicated relationship in terms of how many homes are for sale, what the interest rates, what the prices are. Where this goes, as long as there aren't a lot of homes for sale here, prices will most likely hold. Due to those factors. So interest rates are not a actual driver alone of sales. I've done the linear regression for the last couple of years in our market, and actually the last 26 years. Interest rates are just about a coin toss in terms of driving the volume of sales, or pricing rather. What actually is driving pricing in our market over the last 26 years is the M2 money supply, which is the measure of short-term cash available in liquidity in the United States. So that's actually an 87 to 93% correlation, depending on where exactly. So if you want to know where housing is going as a whole in Colorado Springs, follow the M2 money supply. As they pull it back, our home prices adjust. If they increase the M2, our home prices increase.
With all that, do you still think that buyers should buy? I feel like, this is my opinion, that the wealth gap is just widening. It's going to get harder for buyers to own property with so much information out there on the internet where people can everything seems to be oversaturated, it feels like.
It is. I like to say that there's a lot of noise. There's just so much noise, and then there's a measure called the signal-to-noise ratio. And so I like to cut through the noise with a clear signal. That's what a lot of my stats are for. Short answer to that question is yes, I do. I firmly believe, I'm a licensee as well, and I have been for a decade here, that real estate is the best long-term wealth vehicle that we have access to. But key there, long-term, are the days here. The last 5 or 6 years have been a wild ride in our market, right? literally not sustainable. That
No.
same pattern will not repeat. So yes, but here's the thing. I ask my folks when they're looking to buy to go through a couple of steps of a thought process. First is, can I reasonably expect 7 to 10% appreciation in the time that I intend to hold the home? So for our military folks, this is a especially critical question. You're coming here on a 2, 3, 4-year assignment. Is it reasonable to expect you're going to get 7 to 10% appreciation? So meaning you buy a $400,000 house. If you're going to be here for 2 years, is it reasonable to expect that house is going to sell for $428 to $440 in 2 years? If you look at the last 5 years, the answer would be yes. If you look at the next 5 years, the answer is probably no. The historical appreciation of housing in our market is actually 3.9%. So you can use that metric if you want to plan. Ask yourself that question, is that reasonable? If it's not reasonable, the next question is, do you want to be a landlord? And then if it's a hard no, then you're looking at taking on some massive risk, right? If it's a yes, I'll be a landlord, then if I have to, then or want to be, then you need to ask yourself the question, can my house cash flow as a rental? So if you have a $2,000 a month mortgage, which is pretty optimistic at the moment, but let's call it 2,000, take 10% for property management, even if you plan to manage it yourself, and then take 10% for maintenance. So you need a $2,400 a month minimum rental price to break even on your mortgage, right? So run those numbers, and then if that's a yes, then go ahead and buy the house. But if you don't want to be a landlord, that's a hard no, and you only have 2 years here, and the math doesn't work on the projection for the pricing, then maybe consider don't buy in that house.
Yeah. I did have a seller recently that was in that same situation, but they bought at the height of the market 2 years ago. And we could not make the numbers work. Okay. It was a VA loan, so of course there was no money. Well, there was some money put down, but the house had issues with the water, so they had to spend over $10,000 on a water treatment system. So they barely broke even, and I think it was because of my great marketing skills.
You do have great marketing skills.
Thank you. No, but it was so hard. It made me very nervous, but they were able to walk away with a little bit of cash. But even with the 2 years, we couldn't justify the numbers, the maintenance fees, and they didn't want to manage it themselves because in another state. So, I'm glad that you brought that up.
Yeah, it's important because it's the last 6 years, 5-6 years, it's not going to sustain. It literally cannot. Our wages, their interest rates, they can't. Home prices are not going to keep going up like they do. Well, and you can see. You can't see, but we'll post the link. Over the last 3 years, this has been our price growth, and we are just a couple % off where we were at this time last year. So somebody who bought June 1st of last year, they're just now back to the pricing where they were a year ago. So if you're military, then you just lost a year of potential appreciation.
Yeah, unless you don't mind holding it and just breaking even. If you do plan to keep it,
if you do,
and you can afford it.
That's another good question. Is this payment sustainable for me regardless of what the market does? So if you go in to buy and you're maybe there's a $300 a month loss on as a rental, but you're coming back, or you're trying to build a series of a portfolio of investment properties. I knew this gentleman once when I was in E6. He was in E6. I was just buying my first house. He had 11. And every duty station, he went and bought a house, his first couple duty stations. And then about his 4th or 5th duty station, he could afford to buy 3 houses because he had paid the others off. And so
good for him.
So when the market hit, I'm sure he's doing just fine, even through 2006, because he had the equity to buy out and refinance and do things that he could drop those payments. So if that's your plan, then just factor that in. But for a simple example, one person, one home who has no interest in buying an investment portfolio or building one, it might not make sense to buy on a short horizon.
Yeah. Yeah. And I think people are just like, it's just like keeping up with the Joneses. It's almost like I have to have a house because that's what you're supposed to do. That shows status. And it's really not that serious. Just be responsible with your investments.
Yeah, there is the argument to be made that if you're renting, you're paying somebody else's mortgage, but at the same time, it's got to make sense.
Yeah,
and if you buy with that mentality in mind for just 2 years, then you're putting a lot of risk because what happens if you can't rent the house out, you can't carry the loss. what happens if you can't sell your house? We have, our days on market just climbing. When we say 24 days on the market, that's an average for the market whole. There's homes sitting for 60, 90 days or longer. I've seen some price drops of 50,000, which would wipe out. It just depends on the area. So know specifically the statistics for your given area as well. Not just don't use the market averages. Ask your agent, who hopefully is either Iris or myself. Ask them to drill down on the market specifics, because we could all do that, or they can reach out to me and I'll get them.
Well, and I always do that. Anytime we write an offer, I look at that specific location. We're not just writing offers because that's what the seller thinks it's worth. Unless, sometimes worth shows up in different forms. Like, this house is my dream house. It reminds me of my grandma's. I don't know. People have different reasons why they buy.
True, but underneath that, there should be a data layer.
Yes, not just emotion.
Right, because, we're looking right here at this chart, which shows the closed list price ratio for sub areas,
Which is good to know, because then you can see, like, where the value's at in which neighborhood.
Yep. So somebody looking for a deal, they need to know that the first 5 sub areas are top selling sub areas in town are selling at above 99%.
Do you want to just name off a couple now?
Sure.
Okay.
Cordera year to date 98.7%. Stetson Hills 99.89%. So there's a 1% differential, 1.1 there in those 2 sub areas, for example. So if you're a buyer, it's important information to know, because that can affect your offer price. If you're a seller, it's important information to know, because it manages your expectations of what your house is going to get.
Yep.
It was last year that all of these were 2-3% above list price, right? Now we're down into the 99s, 97 for Flying Horse. So
well, and on Flying Horse, there could be something funky going on behind that too, right? Do you think that because the taxes were reassessed for property?
That's another great point. And another factor to consider when you're looking at where you're buying, Banning Lewis Ranch or Lorson Ranch with their taxes, right?
Yeah, the metro district.
Those factor into those buying decisions. So it's important to know for any given area all the variables.
Yeah. So if someone wants to work with you, reach out to you, how do we get a hold of you?
So they can hit me up, 719-440-6626. They can find me on Facebook. We have the Colorado Springs Housing Group.
The best Colorado Springs group. Yeah, well, you run 2 of the Best Springs.
Thank you. Thank you. There's that one, and then there's the 411 for the 719, which we're closing in on 69,000 people. Wow. Right, and so.
Can you explain what both of those groups are?
Yep, it's no problem. So the 411 for the 719 is all things information about Colorado Springs. You can come there and know that both groups are administered with a philosophy of leadership and getting to the right answer. You will not be hard sold anything, particularly in the housing. Our mantra in the housing group is to meet people at their stated level of need. Yeah. So you got to come in, you ask a question, you're going to get an answer. Same with the 411, and that's for community information, community businesses. My goal with both is to meet people at their stated level of need and meet the request. And so I've got a bunch of tools, from the analytics on the real estate side to our small business roster in the 411 for the 719, which is at the 411 for the 719.com. You can go there and you get connected with vendors who have signed up and who participate in the group.
Yeah. So a lot of resources there. I always recommend it for people that are, because I do mostly relocation, and I'm like, yep, just go in there. They'll be able to answer all your questions. You can read all the comments about the different neighborhoods, questions about housing. So stuff that we can't legally chime in on, you can find out in the group.
Like I often say, if somebody asks about schools, we legally cannot answer that question. Yeah. But you can crowdsource the question. Yep. And so giving them resources. There's also a Facebook group out there run by Mary Morales now, but Colorado Springs Schools. So that's a good one. Yeah.
Good. That's a good one.
If you need any stats, I have a blog at Grok the Market, GROK, themarket.com. And it's again, no pushy. If you ever need any information, agents or lenders or consumers, buyers or sellers, I'm happy to share. I think that the data is super important because it informs people, lets you make educated choices. Even if I can't earn your business, it at least allows you to make
good decisions. Yeah. I always say that in my videos is data driven. And mostly because of the other side of it. It's like everyone's saying, don't buy a house because the housing market's going to crash. But, I look at foreclosure starts, all of that. And so thank you so much for sharing what you have.
Oh, you're very welcome. I don't think it's going to crash, but it be ready in case it does, and because there could be a variable, a black swan
Okay.
event.
So plan.
And then that's what we were talking about though. Run the numbers. Basically, my bottom line on this is this: have a plan B and a plan C. If you're going to buy a house, plan A can be I'm just going to sell it when it's time. Great. Okay. What if you can't?
Yeah.
What if?
Have you seen that movie Fun with Dick and Jane?
Yes.
That movie freaked me out a little bit because I watched it again recently, and I'm like, holy cow! But yeah, you're right. What if you can't?
What if you can't sell it? Then did you have the money to offset the loss if the market does go down? What if it's break even? That's still going to cost you 7 to 10%.
Yeah.
What if can you rent it out? If I can't rent it out, then can you carry the loss? Or you're looking at short seller foreclosure or deed in lieu. And even in an up market, even in an up market, it's possible to be underwater. And then too, one more note about assumptions. That if you have a VA loan, assumptions are a great tool, right? But know that those can take 5-6 months. The banks are not really incentivized to approve them. Have it as a plan B or plan C or plan D, but just run through that algorithm, if you will, and ask yourself these questions. If I buy a house, can I sell it? If I can't sell it, can I rent it? If I can't, or can I get an assumption? Just make sure. I firmly believe in real estate, but make sure that you're planning accordingly.
I agree. Okay. Thank you so much, Rob.
Thank you.
We'll see you soon.
See you soon.